Hello and welcome back to Cryptocurrency Trading Masterclass by Wealthy Education. In this video, I'll show you examples about how to trade support and resistance levels. So in front of you, I have the Bitcoin chart, and it's a simple line chart. It just shows you, it adds to the line at the end of every day and draws a line like you have seen in multiple other charts in the world and, far beyond finance. And so the question is, how do we use support resistance to our advantage? Well, the first thing is you click on this horizontal line tool. And if it's not horizontal, then it may look like a trend line. Just drag it down after clicking on the submenu. And we look for a place where the market seems to either fail to get above or fail to get below. And I also like to look for round big numbers. I start there. So instead of 62, whatever that was, 6,000, kind of take a look at it. And you can see that obviously they were struggling to break it below there. Eventually they did, and things got rather ugly for a while. So Bitcoin struggled to get above there. So let's take a look at 4,000. We'll click on that. And then let's take a look at 9,000. And so on. So I will go ahead and mark these at places that I think might be important. Notice how we shot straight up there and then fell. So that would be a resistance. Notice how it was support all the way back here. This is December of 17. This is June of 2019. So you can see 18, 19 months later, the market remembered that area. Now, in that particular case, I suspect that people that bought here saw it rise and then saw it collapse. That's a massive collapse. That's a $10,000 loss per coin. What happens is people hold on to those. They don't want to get rid of them. And then when they get back to that area, they are more than willing to sell to get out at break even. Otherwise they would have to realize massive losses. So notice here, all the way through here, let me go ahead and draw that line here at 7,000. Notice how it affects the market a couple of times. And then we continue to go higher. We break above it. This 9,000 level comes into play again. 13,000 offered a little bit of resistance. We didn't quite get there previously. And then since then have taken off. So this is 20,000. This is 30,000. And this is 40,000. So there's a certain amount of psychology involved in some of these figures as well. There's nothing particularly special about 30,000 other than the fact that it's 30,000. It's a large round figure. But notice how 20,000 matched up with the highs here. That's where it closed. It actually reached towards 20,000 on that daily chart. And if you don't believe me, there's the bar chart. You can see it actually got higher and then pulled back a little bit. And we'll go into bars and candles, or specifically candles later. They tell you the same information. So how do you trade this? Well, it's pretty straightforward, really. You are looking for areas that matter. So again, let's make sure that we are at an area that matters, and then we can place a trade. So, for example, you can see that this was an area that the sellers could not break down below. People were willing to step in and buy here. But I want you to notice how for starters, the market had been falling for quite some time. And then I want you to notice how this area, 7,000, offered support. They came in a couple of times. But notice this. Notice that every rally, every time they tried to push it higher, they struggled a little bit. And we finally broke through there. And this was your next kind of point of support. And then whammo, right there. That's where you really started to see the market take off. And it had been a grind lower. So that's the first thing you need to keep in mind. When the market behaves like this, you don't want to be a buyer. It tells you that there's something wrong. There's something seriously wrong with the price, and it's going lower. So with that in mind, this was a pretty straightforward trade to take. You short Bitcoin. Where are we going? Well, this is an area that caused some noise previously at 4,000. So that makes a perfect target. Makes perfect sense. With that in mind, you can also take a look. Like 5,000 caused a little bit of a reaction. So what I like to do typically is I like to have a target ahead of time, if at all possible, unless it's a long-term kind of investment. You take the trade once you are below, once you close on the day, in this case, the daily. It doesn't have to be daily, it could be hourly. But on the daily, once you are below 6,000, you sell, you aim for a target. Where's your stop loss? Well, your stop loss generally is going to be where you broke down from. So that would be your initial stop loss. You hit your target. That's a pretty straightforward trade, right? Some time goes by, and you can see that 4,000 continues to offer resistance. And then we break out to the upside. So once you get a strong move to the upside, it's very simple thought process to put your stop loss just under 4,000. In this case, maybe 3,900. And you aim for the area that was previous support. Should be resistance now. And that's exactly where it went. Now, it comes down to the individual trader, but a lot of times what they will do is they will look for support, some type of area in the middle of this move. 5,000 makes sense. It's a large figure. It'll attract a lot of attention. So they will move their stop loss to there, and they will be out of the position if it turns around and falls from 6,000. Now, you have to be willing to accept the fact that you may give back some of the potential gains. In this case, it worked out quite nicely for you. Not only did you hit 6,000, but you hit 7,000, pulled back a little bit, found that to be supportive as well, and then took off. So at this juncture, you could have your stop loss just below 6,000. Now, you have absolutely a free trade at this point, and did here as well. Now you can really let it run. You take your lines. You see that we are breaking higher. You move your stop loss just below this area. You let it run. It breaks above 9. Keep in mind, these are all, until we get to about 13 and 20,000, like after 30 or 20,000, then that's where we have new lines. So these are all lines that you would have been aware of. At 9,000, on a break of that, you could put your stop loss behind the most recent pullback, then put your stop loss here at about 9,000. Your stop loss is at 9,000, and boom, you get taken out here. So that was a trade from 3,900 to 9,000. And, at one point you made even more profit. You could have been a little bit more conservative and move your stop back up when the first pullback occurred, if that's, if you didn't wait for it to break out. But worst case scenario, you're talking 3,900 to 9,000. Now, 7,000 had been important more than once. So as you break above there, your stop loss, you're a buyer, your stop loss 69 or 6,900-ish. You can see we take off, we hit the target, the 9,000 level again. You can move your stop loss above there. It pulls back just a little bit and continues. That's a good sign. Boom, you get taken out. You did run into a little bit of trouble here and you pulled back. That's fine. You still made something like 2,000-ish, maybe 1,900 on that coin. You can also see, you can make an argument for, well, this is probably going to be resistance because that's where we sold off from. But nonetheless, it all works out the same way. So you can see how This is like a roadmap. So the question then becomes, what happens if you take a trade and it turns around and breaks down against you? So let's say you take this and you put your stop loss somewhere around 8,800 and it comes back and it takes you out. Well, what happens is your stop loss works and it protects your account from a big loss. You see the same action, you get involved. This time, your trade works and you go racing higher. And you hit the 13,000 target. And at that point, you're looking at 20,000. You move your stop loss up. You move your stop loss up. 30,000 you suspect could be important for no other reason than, it's 30,000. Like I said, some numbers are just big figures that people pay attention to. And so on. And here we are at 40,000. We'll see how that plays out. Pretty straightforward, really, if you think about it. Ethereum, same situation. You could go through and draw lines, and I will do that right here. There's a lot of interest in this area here. So let me pull up the horizontal line. There we go. So let's call this 275. And you can see support, resistance. So it's certainly a line that the market paid attention to. See what 400 has to say. I like that. That looks good. $600. This is another thing, too, that you will pick up on in some markets. Over time, you'll learn that there might be a pattern. So in Ethereum, as I'm drawing this out, it's becoming obvious that it's about a $200 range between major support and resistance. Now, the one thing that you need to be careful about with support and resistance is to not overdo it. Sooner or later, you're going to come across somebody who suggests, there's daily support and resistance, there's weekly, there's monthly, there's 5 minutes, there's 15 minutes, blah, blah, blah. And that is true. The problem is you'll see some traders go through with the monthly, weekly, daily, 4-hour, half an hour. And by the time they're done, the entire chart is nothing but lines. You do have to kind of focus on the important ones. And I wouldn't be too hung up on 5-minute support and resistance. What makes more sense is to use daily support and resistance on a 5-minute chart. That way you can let the trade run a little further. That's just a little bit of a hint. So in this case, the market had been finding support. You take a trade. You have no idea where we could go except for maybe somewhere up here around 600. But as the trade develops, you notice there's support at 400. So when you take off towards 600, that's where your stop loss is. You break above there, you go to 800. That may or may not meet anything as far as criteria is concerned quite yet. But you notice we pull back, so you would expect some type of resistance there. We come back to the support area. You may or may not still be in the trade, depending on how tight you left your stop loss. Break out above 800. You put your stop loss a little bit below it. Pull back ever so slightly and then break above 1,000. At that point, that's a large psychologically important number. So you figure it's going to act as something, and it does, and you probably get taken out. It's pretty straightforward. We bounce around a bit. We rally. The most recent high is much less, and we break support. So that is a negative sign. So you'd be a seller. Stop loss just above the 1,000 level. You would target this support or resistance level for support. Once you get through there, you probably get taken out. However, you'll notice that when we rallied again, we could not break above 1,000. That's a good place to short, to sell it, put your stop loss in the same area. You're aiming for this area. You didn't really break through yet, but once you finally do, you put your stop loss in the same area and you break down Stop loss above there. You break down to this one. Probably not enough to get overly excited about moving the stop loss up too much. The question is, do you want to put it up here? Maybe. Or maybe just above 500, just because it's a large number? Maybe. Either way, you get taken out. Now, something that you may or may not have picked up on is like this trade here. So we'll call this trade 1. Let me redraw this. We'll call this trade 1, this short trade 1. And that was when we broke through support and you aimed for this. And you got below and you got stopped out. Well, back up here, we failed again. So this is trade 2. We came down here. We didn't really break through. Bounced slightly. And then broke down and finally got rid of the 800 support level. That's not that uncommon. You know, you can shoot through support and resistance. You clearly can in one shot. But notice sometimes, more often than not, it takes a couple of attempts. And that's because this is an area that matters. And when you see a couple of attempts and then finally breaks down, you almost always see that when we return there, there's a reaction. So that means there's a lot of order flow going to break this down, and there's a lot of support. There's a lot of buying there. And once it finally gives way, that becomes a nice trending trade. You know, it doesn't always just break through right away. Keep that in mind. A lot of times it takes several attempts, but those several attempts, that's tenacity. That's the market telling you it wants to continue fighting and breaking lower. So pay attention to things like that the market is continuing to attempt something. That generally means that sooner or later it's going to accomplish it. In the next video, we'll take a look at how to trade based upon Fibonacci levels.